so today it will be English because it's more easy for everybody. And as everybody is interested about ETF and not only French people, it's normal to do it in English. So it will be an international topics because we are talking about entering dark market through ETF. So let me introduce a little bit myself, and after that I will introduce my expert. I'm Wilfried. I'm an entrepreneur with a background in product and management. Finance. I have set up Finance Equip in order for the founders to improve the way they are doing money by financial mechanics, means tax optimization, tax setup, and investment of the benefit, investment of the treasury to make live this money. So I've done these services because I scaled businesses during 6 years with merger and acquisition operations, with growth operations. And I discovered that most of the founders were not good in wealth management, and it have a big impact on their business too. So basically, because they don't know the incredible circle of improving money by investing after that allow you to have some bank debt and to reinvest in your money and doing a circle about that. I have done these services too because I discover a lot of people of our generation don't take their retirement because they don't have enough money to do it. So I want to try to help the founders to avoid that. In many countries, they have the lowest rate of retirement, unfortunately. So let's focus on the expert of today. So I present you Stephane. Maybe Stephane can present himself, in fact.
Yeah, happy to, Wilfried. Thank you for having me. My name is Stephane Desplancke. I'm based in Belgium. I have been working, I think, more than 25 years in the financial industry. In the beginning, more in private banking and retail banking, and the last 22 years in asset management. And of the 22 years, I spent 15 years at BlackRock. I think you may have heard about BlackRock, the biggest asset manager in the world, where I was responsible for Belgium and Luxembourg for the wealth business. And I left last year. I'm quite an entrepreneur. I have an entrepreneurial spirit, and I founded my own company, Toward Wealth Management, end of last year.
Okay, very clear.
That's it
Thank
in a
you very much.
nutshell.
Yeah. So you are doing three main things: portfolio management, portfolio coach, and wealth coach family office. Can you just,
Yeah.
in a few words, explain us?
Yes. Basically, I target people who want to do it themselves, and there the portfolio coach basically gives guidance, insights on markets, on the macroeconomics. But basically, the client is executing their orders and transactions through their broker. I just give insights, and that's a subscription. Of 95 euros per month, and there is a monthly call. You have access to a model portfolio and insights on ETFs, on funds, and on investments in general. But for people who have a long-term horizon and want to delegate and outsource portfolio management to me, and they don't worry about that, and they go, or they are very busy in their day-to-day work, then it is portfolio management where I discretionary manage the portfolios on a longer term basis in order to grow and protect wealth for future generations. And my DNA basically is ETFs. So an ETF is a very cost efficient tool or building block in a portfolio, and it's very hard to beat the market with a normal investment or a normal fund. So 75% of my portfolios are built with ETFs. And the last one is more the family office services. I have some clients who ask me to coordinate for them with their private banks. So I don't manage money myself, but these are quite wealthy clients. They have real estate, they have stakes in companies, they have investment portfolio, and they want to be able to find a trusted person that can help and guide them in their negotiations with private banks, with fiscal experts, etc. So basically, more of a family officer or a trusted person
Okay.
within the financial industry.
That's very clear. Thank you very much. To it's allow you to understand what is the expertise of Stefan and how he can help you. The topic of today is ETF. So let's dig in the topic right now. Why? So the first questions, as you know, we are following a plan. Why ETF is one of the most interesting assets?
Yeah. There are a couple of points why there is a very big growth in the ETF industry, because they have a lot of benefits. First of all, it's diversification. Basically, with a smaller amount, you buy a whole market. Whether the market exists of 100 positions, 500 positions, 2,000 positions, you are very diversified with that building block. The second one is cost efficiency. It's very cheap. You basically invest in the American stock market, in the S&P 500, for instance, for a very cheap cost. Sometimes it's 0.07% per year, and you are invested in that market. Access is another one benefit. If you want, for instance, to invest in, I don't know, in Japan and in smaller companies in Japan, you can do this. You have more than 3,000 ETFs in Europe, domiciled in Europe, where an investor can choose from. So you have a lot of access. Liquidity is the fourth one. Basically, it's a fund which is listed on a stock exchange. So basically, you buy the product on a stock exchange just like you buy a stock, and you can sell it on a stock exchange as well. So it's very liquid and you can access your money every day. And the last one is transparency. And transparency is you see all the positions of the ETF in your portfolio. For a normal classic mutual fund, you only see the top 10. For an ETF, you see on the website of the asset manager, or through a broker, you see all the positions in that ETF. Those are, for me, are the five most important ones.
So let me recap. You talk about diversification, cost efficiency, access, transparency,
And
liquidity, and
liquidity.
flexibility, maybe.
Yeah, flexibility is a bit the same as liquidity or access. Flexibility is basically it's listed on a stock exchange, so you can do whatever you want on a stock exchange, just like you buy a normal stock. So you are flexible in the way you buy and sell the ETF. You are not dependent on a specific moment in time. If you buy a fund, for instance, a mutual fund, you only see the price at the end of the day. Whereas for an ETF, through the broker, you see basically at which price you bought the ETF. So that's the flexibility. Yeah.
Okay. So finally, let's say there is six factors
Yes,
about
if
what
you
ETF
count
is interesting.
flexibility. Yeah.
Yeah. Maybe we go very fastly on this topic because I know we have a lot of things to cover. But what is an ETF?
Yeah. Very short, an ETF is basically a mutual fund, so a pool of money, just like a normal mutual fund that you can buy through a bank. The only difference is there are two differences. First of all, it's listed on a stock exchange, so you can buy the ETF on the stock exchange, sell and buy. And the second one, it copies, or it copies, basically it tracks an index. An index basically is the S&P 500, the CAC 40, the Eurostox 50, an index of stocks or bonds is also possible, and it copies that. It's very cheap because it copies no more nor less. If the index goes up 20%, your ETF goes up 20%. If the index, the CAC 40, declines with 30%, your ETF will also decline with 30%. So it's a cheap way of following a market or tracking a market.
Okay, thank you very much. How big is it, this ETF? Because you told me like there is a lot of liquidity. It's interesting to know how big is it.
Yeah, if if you look globally and you look at the whole capitalization in equities, for instance, all over the world, so the assets that are invested in equities, only 10% in the US is invested in ETFs and only 5% in Europe. So it's a very fast growing market, but still the majority of all the assets and equities are in individual stocks or in mutual funds or other vehicles. Just to give you an idea, the assets under management for the ETF business in Europe, because a European investor cannot buy a US ETF, it need to be a European domiciled ETF, is around 10 trillion
Okay.
euros, so 10,000 billion euros, and it grew very fast the last 10, 15 years.
Okay, very interesting. How do ETF works in terms of performance, cost, and process?
Yeah, I can be very quick. I already mentioned it. What is an ETF? Basically, the performance of an ETF tracks the performance of an index. Um, there is a slight difference between an ETF, the performance of an ETF, and the performance of an index. That's the fee of the asset manager. But that's only a couple of basis points. What is a basis point? That's 100 of a percentage. The costs are cheap. You can buy an S&P 500 ETF for 5 basis points or 7 basis points. So 0.05%, 0.07%. The more niche an ETF is, and I said there are 3,000 ETFs. If you invest in a Chinese ETF in smaller companies, then it will be a little bit more expensive, but still you talk about 0.3, 0.4% annually. The process is basically you buy an ETF through a broker, but an ETF is managed by an asset manager, just like a mutual fund. And that asset manager is the goal or the objective is to track the index as close as possible with the least cost to do so. And
Okay.
in that way, you basically buy the market. Yeah.
Okay, so it answered to my question of who build an ETF, and can I build my own ETF myself?
First, let's say who builds ETF or who manage ETFs? You have several companies. Um, I always use more the bigger ones because for ETF, the liquidity or the volume is the most important thing. The more volume and assets there are in an ETF, the less expensive it is, or the more liquid it is, and the more cheap it is, the cheaper it is. You have the bigger names like iShares. That's the brand name of BlackRock for the ETF business. You have Amundi, you have Vanguard, you have State Street, you have Deutsche Bank, you have Lixor, which is now part of Amundi, you have Wisdom Tree, etc. You have the bigger names. These are very cheap. Then you have some smaller niche players who are specialized in specific ETFs, like thematic ETFs, an ETF in robotics or electric vehicles or in AI. These are smaller boutiques that manage ETFs as well. They are a little bit more expensive, but then you have a more niche ETF. Can I build my own ETF? That's very difficult. That's only for very big institutional investors. You could buy a couple of ETFs in your portfolio around a specific theme, for instance, but then you take 3, 4, 5 thematic ETFs that exist and you put them together in your portfolio through your company, for instance, and then you are invested in a specific thematic. But
Yeah.
building your own ETF as a vehicle is as for a private individual is practically not done. No.
Okay, very interesting. So we already talk about advantage of ETF. So maybe we can go through how can ETF offer instant diversifications?
Yeah. Um, Basically, one of the advantages is diversification. So you don't buy one company, you buy an index through an ETF. And an index, there are indices that consists of 30 stocks, but you have indices that consist of 1,500 stocks. So basically, by buying an ETF, you have instant diversification. The bigger the ETF, you have an American ETF or a European ETF, the more stocks you have in your portfolio, in your ETF. If you buy artificial intelligence, an ETF in artificial intelligence, then you follow an index that is built with stocks only related to artificial intelligence, and then you have less stocks in your ETF, but still you can have 30, 40, 50 that all are related to the thematic of AI. uh, Basically, that's it. You buy an ETF and then you are diversified. You buy more than one company.
Yes, great. Very, very clear. So, why is it's an advantage to invest cash in ETF, for example?
um, Basically, if you as a company, if you have a lot of cash and you don't need the cash right away, if you put it at a bank, you are dependent on the balance sheet of the bank.
Yeah.
You're not diversified. You are only putting your money at one bank. If you buy, for instance, very safe ETFs, which are not very risky with the cash of your company, you are invested in a diversified range of money market or fixed income or cash instruments, where you're not dependent on one institution. If you invest cash in ETFs and you don't need the money right away, you can have more return. If you put it at a bank, the interest rates have risen. So you have a little bit more on your savings account or your checking account. Still not a lot, but a little bit more than 2 years ago or last year. But with a cash ETF or perhaps with a fixed income ETF, you can have more return. You can have 3 or 4 or 5%, depending on your horizon. If you need the money tomorrow or next week, don't put a lot of equity ETFs in your treasury because they fluctuate. If you have safe ETFs, you can have a little bit more return than a normal savings account or checking account.
Okay, very good question. Finally, if I can add a question, the return, in fact, the return of this ETF. I know it depends in one type of what type of ETF you invest in, but let's have a kind of fork.
If you invest in fixed income ETFs, so bonds, which are safer and they don't fluctuate as much as equities or stocks, then if you have a range depending on the risk of the bonds and the country or the sector, you can have from 1.5%, 2% up to 4, 5, 6%. Don't expect that you have 10 or 20% or double your money in 2 months' time. With safe ETFs or fixed income, that is not possible. If you invest in an equity ETF, suppose with a treasury you buy an S&P 500, you are dependent on the stock market. If you are lucky, because nobody can predict the future, you can perhaps have 10 or 15% in 2 months' time or in 3 months' time. But you risk losing money as well if the stock market goes down. Now, with the Israeli conflict, if the oil price would rocket in the next weeks, then the stock market would decline, and then you have, uh, let's say, then you risk losing money if you need the money in 2 months' time. That's an equity ETF. But for safer ETFs, between 1.5 and 3, 4, 5% is possible.
So you give us the safest and the most risky.
The safest is basically an ETF in fixed income or
Yes.
bonds, but very short duration, so very short maturity. And there, this year, for instance, the return was 1.6
Okay.
net of fees.
And about
And
the riskiest? Yeah.
the riskiest would be, but I'm not a specialist in that because I'm a little bit older, is a crypto, for instance, digital assets.
Okay.
There, last year, an ETF related to digital assets, you gained, I think, 70 or 80%, but this year you can easily lose 50 or 60% as well.
Okay.
But apart from crypto, Wilfried, in the equity side, it's more technology, a specific technology or a subsector of technology that can fluctuate much. So on the upside, but also on the downside.
Okay, of course. Always with the most riskiest, you have, of course, a better return, but potential better return, but a bigger possibility to lose everything.
Yeah.
So let's go back to the plan. Sorry for this digression. Okay, so we were at the cash in ETF. What exactly does more liquidity mean?
Yeah. Um, if you buy a stock on a stock market, then you have a buying price and a selling price. The difference between the two is the bid ask spread. If suppose if you buy a stock in the morning, you have the ask price. If you sell the stock in the afternoon, you have the bid price, and there is a difference between the two. So you would lose money if you trade in one day, for instance. The bigger that spread, the less liquid and the more costs you have. So an ETF with a lot of liquidity means that the bid ask spread between buying and selling an ETF on the same day is very tight, is very narrow. And if the ETF in size, the assets under management, so the size of the ETF is very big, then you have less, then you have more liquidity as well. So I would advise only buy an ETF with a lot of assets in there. An ETF with 5 million assets under management, you will pay more on the stock exchange than an ETF with 500 million assets under management, for instance.
Okay. Very clear. Another questions is about, like, can we use an ETF as a collateral? That means as a guarantee for a bank loan.
That depends. I'm not a bank, so
Yeah.
I don't know, but that would depend on the bank and the policy of the bank and how do they rate ETFs, mutual funds, in the collateral for a loan. I know that individual stocks they have less value if you have a loan. You can loan less if you only have a portfolio of individual stocks. If you have ETFs which are very diversified, the same as mutual funds, you have less risk than buying an individual stock. So normally you can have a bigger loan with the same volume of assets in ETFs than when you have only in your portfolio individual stocks. But the exact percentage, I don't know. But normally, I think every bank will accept ETFs if you have a portfolio of ETFs and you want to have a Lombard loan
Yeah.
against that.
So
Yeah.
the Lombard loan allow an entrepreneur to have a loan through his investment, and basically the ETF is very liquid, very diversified, and very transparent. So it's a very good asset for the Lombard loan. Okay, so let's talk about the investment requirements. Okay, so let's talk about what initial amount do I need to start investing in ETF.
I can be very short, one share. And
Okay.
the price of a share of an ETF varies. Every ETF has a different price. But if the price is 10 euros, then you can buy that 10 euro. You can buy basically an ETF for 10 euros. The thing is that you have costs if you buy that ETF through your broker on a stock exchange. If the cost of the transaction is 10 euros and you buy one ETF of 10 euros, then nobody will do that because you have too much costs. So you need to compare the price of an ETF with the amount of ETF that you buy with the costs on the stock exchange. And that differs. You have brokers who are cheaper than other brokers, for instance. But normally, the initial one or the minimum one is one share. You don't have 10,000 or 100,000 as a minimum. It's one share. Yeah.
Okay. Um, do I need a special brokerage account to buy an ETF?
No, I can only speak for Belgium. I
Yeah.
do not know in other countries, but for Belgium, you have one securities account, and you can buy a fund, you can buy an ETF, you can buy an individual stock, and it's all stocked or deposited on that account. So not a special account needed.
Of course, I can give the information about each countries if the people ask me. Which platform do you recommend for investing in ETF?
That depends a bit on the individual choice because you have the quality of the platform, the user friendliness to buy. stocks or ETFs, you have the costs of the platform, and you have the product offering. For me, the most important one is um, the product offering. You have more than 3,000 ETFs, you have a lot of choice. If you want to buy smaller cap companies, if you buy technology or healthcare or industry, whatever, if you only have a limited offering on your broker, for on the broker for ETFs, then you are limited. So the offering is the most important one, and I'm happy to pay a little bit more just to
Yeah.
have a full range of ETFs available. Fees, of course, are important, especially if you buy, for instance, recurrently. Um, if you buy with treasury, for instance, or privately, every month or every quarter you buy 1,000 euros or 2,000 euros, then the costs compared to that amount is important. So you don't costs are important, and also the quality of the platform. Do you find information on that platform? Is it easy to navigate? Is also important. In Belgium, for instance, KBC has one broker, Bolero, which is a little bit more expensive than Bucks in the Netherlands, for instance. But the quality of the information and the user friendliness is for me a little bit more, and the offering as well. So
Okay, very interesting. So basically, free criteria, product offering, fees, added value content too,
yeah,
and user friendliness.
yeah, added value content. Someone who already knows everything about ETFs just want to have a cheap fee. He knows what he wants or she wants, and he or she buys it. The added value content is for someone who is new to ETFs or new to the stock market and wants to have more added value content before he makes a decision, for instance. Yeah.
Okay, very good. So let's talk about the reliable information about ETF. Where can I find it? Because I
Yeah.
think in your case, information is like strategical.
Yeah. Um, First of all, I would advise, if you buy ETFs from the bigger companies, like BlackRock or a Vanguard or an Amundi, on the websites of these companies or asset managers, you find the whole list of all the ETFs. Sometimes a website is a little more complicated than another one, but for everyone, all the ETFs are mentioned there with all the details, the costs, a fact sheet, the documents attached, everything is there. Um, Brokers, if you go to a broker with added value content, you can find a lot of information on ETFs, the graph or the chart from the ETF with the price, the costs, the positions in the ETF through the broker. And then you have some platforms or private initiatives where you cannot trade, but you can find a lot of information. Just ETF.com is a German website where you can compare all the ETFs together on the costs, on the performance, etc. Trackinsight.com is a little bit less known, but you have a lot of articles and publications on new ETFs, etc. These are two that I use a lot, but you have etfstream.com and etf.com is also platforms more US centric where you can find a lot of information. Just ETF is for me the most user friendliness and very structured and insightful.
Sorry, you give two websites I didn't write. ETF
Yeah,
with stream and the other one, the last one.
etfstream.com and etf.com. Just
Oh,
www.etf.com
okay.
makes sense. ETF.com, that's a fantastic domain, but that's more US centric. And ETF stream in one
Yeah.
word.com is more a little bit more European centric.
Okay. And you talk to me about newsletters. No.
Yeah. Let's say there are newsletters. If you go to just ETF.com or Track Insight or these other platforms, you can subscribe to a newsletter. Most
Okay.
of them are free. If you go to a broker, perhaps some brokers have newsletters as well, or educational material on ETFs. I know the Belgian market quite well. I don't know the French or other countries, but most of the brokers have newsletters as well. I have a
Okay.
newsletter with two
Yeah.
words. But for now, it's only in Dutch. But I'm working on an English version because I
Okay.
started. I'm an entrepreneur with not a lot of people around me, so I have to do everything myself. But it will come, and I will translate it in English, and it's called Towards Smart ETFs and Towards Smart Portfolios, and it's 10 euros per month or 995 per month, but it will be translated, so two versions. Unfortunately, not French, perhaps later on, but English and Dutch.
And you have amazing tools to translate today, you know?
Yes, I know. Yeah, but to be honest, I'm 54, Wilfried. I'm not a digital native, so I have to find my way in all of these tools and apps and AI in order to translate very efficiently.
Okay.
But I'm
I
working
I
with an
will I
IT
will give
company.
you I will give you advice for free about that because it's
Okay,
in my
great.
interest that you have your newsletter in English too.
Yeah.
Uh, for the community too. Very very interesting. Thank you very much. So there is a where we can do some simulations and virtual portfolio on every of these websites.
On just ETF, you can have virtual portfolios.
Okay.
Um, I use a tool in my professional business is Reuters. It's now Refinitiv, but it used to be Reuters. It's basically the counterpart of Bloomberg,
Yeah.
but that's only for professionals.
Yeah.
But on just ETF, I think you pay 60 euros a year, and there you can create 5, 10, 15 portfolios, and you can select all the ETFs in that portfolio. You can see the total cost of the portfolio, you can see the performance, the chart, the composition of all the ETFs in that virtual portfolio. So it's for me, it's the most easy tool, and it's quite cheap. Just ETF.com. Yeah.
Okay, let's talk about the investment process. I know that we said that like, we have to cut a little bit of content, but I think investment process makes sense to understand, uh, for example, the range of ETF. It's very
Yeah.
important. I think it shows diversification and it shows too like you analyze a lot of things, and that's why ETF is really really interesting.
Um, I think you mean how do I choose, for instance, an ETF
Yeah,
in the portfolio, the different criteria. Um, First of all, basically, you start with based on a risk profile of yourself or the investor, based on the goals of the investor, how much risk you are willing to take. That's a very important one because you have very safe ETFs and you have very risky ETFs. Once, suppose you are a dynamic investor, if you're an entrepreneur, mostly you love taking risk because you do that with your company anyway. So then you come up with equity ETFs. The size is very important of the ETF because the bigger the size, the less costs and the more liquid the ETF is. The track record of the ETF, in the sense that the difference between the index performance and the ETF performance. Because
yeah,
if you want to buy an ETF in the CAC 40, for instance, you want to have the performance of the CAC 40 as close as possible. If the track if the difference between the CAC 40 and your ETF who
yeah,
tracks the CAC 40 is very big, then it's not really efficient. The name of the provider or the asset manager. You can buy very niche ETFs with a smaller company.
yeah,
The risk there is that you don't have a lot of assets in that ETF, and perhaps in a couple of years the ETF is merged with another ETF because it's just too small, or it's closed altogether, and that you don't want that. So I know that the offering from BlackRock, from Amundi, from Vanguard, from State Street, the bigger ones, is huge. It's the core activity, and they will last, and they will be there for years to come. So the quality of the ETF provider is there, and also. If you want to invest in an ETF in your portfolio, the tax regime. I'm not a tax specialist, so I know the tax situation in Belgium, so it differs per country, but you have capital gain tax and you have income tax.
okay,
For instance, in Belgium, if I buy an ETF, you have two possibilities. You have a distribution ETF, and then you have a coupon or a dividend every year or twice a year, or you have an accumulation ETF, whereby you don't have an income, but you have every coupon or dividend is reinvested in the ETF. And in Belgium, for instance, you don't have a capital gain tax. So I buy an ETF at 1,000, I sell it uh, privately on 2,000, then my 1,000 of gain is tax free. If I have an income ETF, a distribution ETF, on the income that I receive, I pay 30% um, withholding tax. And that difference uh, per country, of course, it's not the same in
Yes.
every country, but it's an important part if you don't want to pay a lot of taxes, um, and you don't need the income every year from that ETF. Most of the investors are taking accumulation ETFs because in a lot of countries you don't pay capital gain tax, or if you pay it, the amount is less than when you have an income tax or a withholding tax.
Okay, very interesting. Very interesting. We will have the opportunity to do a little bit more focus on tax in another webinar. What range of ETF? Because we talk about which is different categories of ETF.
Yeah.
Can we talk about that? Because it's really, really strategical.
Yeah, I repeat, there are more than 3,000 ETFs. And when I learned everything about ETFs at BlackRock, I thought, yeah, it is easy. You just follow a market. How much choice do you have? But you have enormous amount of choice. Um, you have the biggest category is equity,
Yeah.
but equity has a lot of subsectors. You can have European, US, Japan, emerging markets, China. You can invest in whatever you want in equities all over the world.
And you are
Within
equity, you are investing in businesses and in fund.
Yeah,
Yeah.
so equity basically is you invest in an equity ETF. Underlying, you have companies,
Okay.
listed companies on the stock exchange, the Apples, the Teslas, Louis Vuitton, LVMH, etc. So all the listed companies you invest in through an equity ETF. But then you have several equity ETFs. You don't have one equity ETF, but you have equity ETFs that only invest in European companies, American companies, Chinese companies, smaller companies. You have ETFs in smaller companies or in large cap companies, so the bigger companies.
Okay.
I won't get into detail because it
Yeah.
would take too much time.
Yeah.
But equity is the most known and most sold type of ETF. Bonds is the second one. It's fixed income. So basically, these are government bonds, corporate bonds. Um, Whether it's in the US or in Europe, all over the world. In
Let's talk
France,
about, for example, the debt of France actually for the next year. The our government is fundraising like 300 billion, I think, in bonds.
yeah. So you can buy an ETF that only invests in French government bonds.
Yeah.
Of course, the return of that ETF will not be as high as equity, but it's much safer because you buy something from the French government. You have a coupon, you have a return which is higher now because the interest rates are going up, but it's quite safe and it's risk free. Basically, because I don't see the French government go bankrupt. But you can buy bonds of Tesla or Apple. Apple
Yeah.
can issue a bond as well, where you have a little bit more coupon or return on that bond. Why? Because it's a private company, it's a listed company, it's not a government. So all these types of bonds are possible within ETFs per country, per region. Government or corporate, or even if you buy a bond, for instance, in Brazil, you have ETFs that only invest in Brazilian bonds, which pay a higher coupon than in France because in Brazil is an emerging country. Uh,
Yes, absolutely. Very
that's for the
interesting.
bond part. Yeah.
For the
Then you
cash?
have cash. Basically, our money market or cash ETFs are basically fixed income or bond ETFs, but with a very, very short maturity, up to 1 year. Basically, it's a bit similar as cash. Now the return is higher, but the last couple of 7 or 8 years before Corona, you practically have nothing from return on cash because the interest rate was zero. Now that's gone up, and these are the safest ETFs that you can have. It's like a savings account, but it's an ETF.
So concretely, it's like if I invest, in fact, in the Swiss franc, for example.
You have ETFs that are
Is it,
domiciled in Europe, and they invest only in Swiss government bonds, but only, or other types of fixed income, but only with 1 year, maximum 1 year duration or
I mean,
maturity.
like you say cash. So I just want to understand: is ETF like dollars on
Yeah,
Swiss franc, on euro, and stuff like that?
yeah.
Yeah.
For equity, for bonds, for cash, and also for the other ones, you always have different currencies. So you can buy the same ETF in euro, in sometimes in dollar, sometimes in Swiss franc, in Japanese yen, in pound sterling. So per ETF, for the same ETF, you can have different currencies. Someone who's based in Switzerland and wants to buy an ETF in cash or in equity, but wants to do it in the Swiss francs, then he has the possibility. Not every ETF has all the currencies, but if you have the bigger categories, mostly you have choice in the currencies you want to invest in.
Okay. In the fourth category range, it's alternative.
Alternatives, that is limited. For instance, commodities. So you buy copper or nickel or gold or oil or gas, not the equity, so not a company, but just the price of oil, the price of gas. There you have commodity ETFs, and that's alternative ETFs, because you are depending on the price of commodities going up and down. That's quite risky. It depends on supply and demand for the commodity, but it can be a diversification in a portfolio is to invest in commodities. If you think the oil price will go up, you can buy an ETF that only invests in oil and gas, the price of oil and gas, for instance.
Okay.
Another
And
part of alternatives is private equity. That's the second part, which is investments in an ETF who invests or that invests in private equity listed companies. And private equity, what is private equity? A lot of entrepreneurs are investing in non-listed companies, young tech companies, venture capital, all these kind of things. So very, very small companies that are not listed on a stock exchange. You have a lot of funds that are investing in these types of companies, and there you have a choice. There you even have an ETF that only lists in these private equity houses.
okay.
Blackstone is one of the biggest in the world. That has nothing to do with BlackRock.
Mm.
KKR, you have in France, I think, a lot of private equity boutiques as well. And there are some ETFs available that invest in the bigger private equity houses. And that's an alternative
Yeah,
ETF.
it's really very interesting because we will do another webinar on this private equity and secondary market too.
Yeah.
About the another range is factors, character of company, value, small
Yeah.
cap.
Yeah. Um, Suppose a factor, let me explain that first. A factor is basically a group of stocks. It's only about equity or stocks. It's a group of stocks with a similar characteristics. Suppose you have an ETF investing in 100 stocks, and the characteristic of all these stocks is that they are cheap, very cheap on the stock market. They didn't rise much the last years. They are very cheap. Then the factor is value. You buy a value ETF. You buy an ETF with only very cheap stocks. Another factor which is very popular now is quality. Basically, you buy an ETF that only invests in stocks that have a characteristics of being quality companies. What is quality companies? They don't have a lot of debt. They have a lot of free cash flow. They have a good management. So they are not very reliant on the interest rates because they don't have a lot of debt. All these companies have a similar characteristics, which is quality, and you can buy a quality ETF that only invests in these types of companies. These are the two main factors. You have others, but otherwise, I think it would be
Yeah, longer.
too longer to
So,
explain.
so there is
But
the
it's an
last
interesting
one.
part. Yeah. Sorry.
The last range is thematics.
Thematics. This is a very interesting type of ETF, which has become very popular since the 7-8 years is basically an ETF investing in stocks that are related to a specific mega trend or theme. I give you one example, and it will make everything clear. Is iShares or BlackRock has an ETF, electric vehicles and driving technology, and this ETF tracks an index, and the index is only consisting of companies that are related to the theme of electric vehicles and driving technology. That can be a mining company because you need commodities to make batteries, lithium, for instance. But in there can be a company that is making or producing charging stations for your car. Another company can be a semiconductor company that is making the chips to go into that car. So every stock in that ETF is related to the mega trend or the theme of electrification of transport and in general. That's a thematic ETF. It's not a sector ETF. A sector is only technology or only industrials, where a thematic can be a combination of industrials, but industrials, technology, everything that is related to that theme. Another
Oh,
theme that is important is water, for instance, or
ah,
clean
yeah.
energy, um, or um, automation and robotics, artificial intelligence. So there are a lot of themes, and if you invest in ETF in thematics, if you have a successful team, you will grow more. That is the expectation in the future than if you invest in a normal ETF.
So, for example, I have one of my entrepreneur in my club who asked me like to invest in aging or in silver
Yeah,
economy, aging populations.
yeah,
So he asked me to gather some topics about medicine. What will be like maybe real estate, like retirement or real estate nursing home and cruise
yeah,
companies. That's your topic. You
yeah,
told me
yeah.
about that. So it will really be a combination of everything like that.
Yeah, but the common denominator or the common theme is basically people getting older. They will go more on a cruise. They need more medicine. So everything that has to do with demographics and getting older, people getting older, is then invested in that ETF. And you have a lot of ETFs on aging population or demographics or silver. How do you call it? A silver age
Economy,
or
silver
economy?
economy.
Yeah, yeah,
Yeah,
yeah.
yeah,
You
very
have a lot of
interesting.
ETFs.
Yeah,
Yeah,
very, very interesting. Quite a very diversified, in fact.
yeah,
Okay,
yeah.
let's go directly because we are a little bit late on the timing. So we will go, if you are okay, directly on durations and costs.
Yeah,
Like this, we can talk about the long term versus the short term. For me, the short term will be like 3 4 months, and the long term will be you tell me like around like 7 years, 8 years, something like that.
yeah. Um, if you invest in ETF, you invest in listed companies. If you invest in equity ETFs, so these companies and these stocks can go up and down. It's risky, it's volatile. On the short term, if you invest in an ETF in equities and you need the money with your company after 3 months, you take a risk. You can be lucky, and if the stock market is 10% higher in 3 months and you sell the ETF, then you have 10% return. But you have to be careful that if you need the money and you need to sell, and at that time, due to a political event or another event, the stock market is 10% down, then you will have a loss of 10%. You can do that. It's perfectly possible because it's very liquid, but you have there a risk of having a loss because nobody can predict the future. I cannot predict the future. BlackRock cannot predict the future, and you don't know what happens. Longer term is then I say 7 years, but in the industries they say sometimes 5 years, and that's basically growing your wealth. If you don't need the money with your company, and you have a lot of companies that have a lot of cash, because it's fiscal not beneficial to get a lot of out of that company, and you place it in your company and you don't need the money for a couple of years, you can easily invest in a portfolio of ETFs, and there you will have a decent return of 6 7 8 9 10% over 4 or 5 years. There could be a year where you are negative. Last year, for instance, in equities, you had lost 15%. But the year before, you had 25% of return. So it goes up and down, but the longer you have as a horizon, the less risky it is, because you don't need the money right away.
Okay, very interesting. So very shortly, what are the costs associated with buying and selling and holding ETF? So
Yeah,
there is brokerage fee, I suppose.
yeah, that depends on your broker. Every broker, that's their income, asks for a fee, and you have to compare the fees for ETFs for the different markets, depending on your broker. Then you have the taxes, and if you buy an ETF in Belgium, for instance, you have 0.12% of tax on stock exchange, or stock exchange tax, but that's different in every country. You have sometimes a custody fee. If you buy an ETF, the ETF is placed in custody with a bank. Sometimes the bank or the broker will ask you a fee. And then you have a bid ask spread. And that's basically what I explained. The bigger the bid ask spread, the more costly the ETF is. But it's not a direct cost, it's more an indirect cost. The main ones are brokerage fees for your broker, the taxes, and the custody.
Okay. Okay, very, very, very interesting. So let's go directly to another part, part or concerning investment techniques. Maybe we will have time at the end to talk about that. But let's talk about how you build your assessment. Very interesting. So let's do a model portfolio, and let's talk about what you will put in it. So let's say model portfolio for 7 years,
Yeah.
and you will change it by year how many times?
Yeah. The first step that I do, and that's my job, is to do portfolio management for people who don't have time and they outsource to me. First of all, I get to know the client. How much risk can he take with the money? It's whether it's in his company or whether it's privately. What is his goal? What does he want to, after 10 years, want to travel around the world or buy a yacht, for instance? That I map these needs. The second one is then I compose a portfolio of 10 to 12 ETFs. Sometimes there can be a stock in there or a fund, but mainly it's ETFs. Um, in order to reach that goal, based on also the horizon that the client has, the 5 or 7 years or even longer. If I do the composition of the portfolio, then the third step is I choose the ETFs or the building blocks in that portfolio. Um, and I have a part of, let's say, two sides. First of all is a core part, because I like the philosophy core satellite. The core part is basically 3 or 4 ETFs: America, Europe, Japan, and emerging markets, and they don't change much, only once a year. The satellite part is the active part, and that's 5, 6, 7 ETFs. And there you have a thematic ETF, or you can have a factor ETF or a sector ETF. Um, um, these are the satellites, and these I change 3 or 4 times a year, depending on the circumstances. For instance, if we go to a recession in Europe and the economy goes down, then I will tend to buy a factor ETF, which is called minimum volatility, because these are the stocks or the ETFs that are fluctuating less than others. Because if I go down, I want to go down less than the market. If there is a recovery in the economy, then I will buy more a value ETF, because these are cheap companies that are benefiting from a recovery of the economy, for instance. If technology is cheap, after last year, because Tesla and Microsoft went down a lot, I bought a technology ETF in January of this year, because everybody said it has been it is cheap now. They have suffered, so I buy an ETF. That could be after 4 months, Wilfried, that I sell the ETF if I have 10 or 15% return. But that's basically the framework of my model portfolio. And then I monitor the quality of the ETFs and everything that is the building block in that portfolio.
Okay, very interesting. So you have some safe haven like currency or gold or Swiss francs, something like that.
Yeah, yeah. Um, suppose that the, the forecast is very, very bad, then I will stay invested. I will never fully go out of the market because nobody can predict the future. And I know a lot of people who said, I don't believe in the economy anymore. It's apocalypse. I will sell everything. And then the stock market rose 20% and they didn't benefit from that. So I will never leave the market. But the more trouble ahead and turbulence, the more I will put a bit in cash ETF, in Swiss francs, or in US treasuries, so basically American government bonds, because these are very safe categories. I will still have equities and stocks, but my part of the safe part will be higher. If everything clears up again, and that's the stock market, you have periods of good and bad times. If everything clears up again, then I will use my cash and Swiss francs, or I will sell the Swiss francs and then take more risk.
Okay.
So it's
So
actively managed portfolio, but with cheap ETFs. Why? And that's the last thing I want to mention. That's the reason why I started my company. Is you have a lot of classic mutual funds. The banks are earning a lot on that. The average fee of a fund, a classic fund, not an ETF, is 1.5–2% that you pay, that the client or the investor pays. So you have less return. If But in reality, it's very difficult to beat the S&P 500 or to beat the market. So if you cannot beat the market, why do you need to pay 4 or 5 times more for a fund? Because the bank is earning a lot of money on that. Just buy an ETF and you have the same result, and you pay 4 or 5 times less the costs. And I don't want to be the cheapest in the market, but if I can earn more money by saving on the costs and the result is the same or even better, why won't I do that? So that's the reason why I use a lot of ETFs in my portfolio.
okay, very interesting. So basically, you analyze by ecosystem. I know that, like you have like the middle class organization, the emerging. So you have overlapping in every of these kind of analysis. Like, yeah, sorry, my question is not very clear.
I hesitate a bit. Can you perhaps rephrase?
Yes, let's talk about something like we talk about the future. The future, it will be a topic of middle class growing. It will be a topic of urbanization. That means moving into city or moving out of and going in more little cities. It will have an impact too with in a link with climate change. So it's very difficult to analyze that.
Um, Basically, and BlackRock defined 5 mega trends for the future, and you already mentioned urbanization, climate change, demographics, and the other ones was resource scarcity and clean energy, also geopolitical fragmentation with Ukraine, etc. So these mega trends are always in my portfolio, and these are the part of the satellites. So I can use an ETF in demographics or aging population or clean energy, but sometimes I can sell as well if I have a lot of return in a short period of time. And but it's a basis of my portfolio. So because there the growth and revenues and earnings of these companies for these thematics are will be bigger in the future than a normal ETF. But I will not put everything of my portfolio all in all these thematic ETFs because they can go down very quickly as well. So I always use a blend between the core and then the thematics, which is part of the satellite
Okay,
portfolio.
very clear. So we had a very interesting part on investment techniques, but we will not have the time to talk about that. Let's talk about another topic. I don't know if you have a slide to display or about the offer behind people want to work with you.
Yeah, but I can share. I think I'm not used to the platform, but I will
So
share.
there is a share screen at the bottom of just at the bottom, like near the camera and micro.
Just 1 second.
No problem. Um,
Yeah. What I
You,
noticed, because I haven't translated it to English, so it's in Dutch. But what
okay.
I can summarize
Yes.
with it, if that's okay
Yes.
with you.
Absolutely. Let's
Um,
summarize it. Yeah.
I will summarize it instead of using. So basically, the three services that I provide, and I said it in the beginning as well. First of all, for people who want to do it themselves. They are passionate about investing. They work with a broker. They just need insights, a sounding board on the macro side, so macroeconomics. What type of ETFs do they buy? If a certain ETF is good or bad? I give insights and guidance. That's Portfolio Coach. That's
Yeah.
95 euros per month, or 995 per year. You have a little bit of discount if you pay in a year.
Okay.
And then you have a monthly call. Uh, I organize a monthly call for an hour where I share a lot of insights and guidance on the market, and I also share a model portfolio of ETFs for a dynamic risk profile. I'm working now on a balanced profile or a defensive, but I think a lot of entrepreneurs, if they invest, tend to lean to equity. So I use a dynamic model portfolio. That's Portfolio Coach. The second one is basically the core activity is someone who has a lot of who has a bit of money, who earns a lot of money, who works very hard, who doesn't have the time to follow that up, but who wants to have an intelligent portfolio, who doesn't want to pay a lot of costs that only goes to banks, for instance, or insurance companies, want a smart, intelligent, optimal portfolio from someone who knows a bit about investing, and that's portfolio management. Um, uh, I start at 300K, so 300,000 euros. Um, I have the three basically added value propositions, or the USP is basically I use a lot of ETFs, so I try to make an optimal, cost efficient portfolio consisting of ETFs and sometimes private equity or funds as well, if I find a good one. The second one is I do a very personalized follow up. I will not have 200 clients. I will have a maximum of 50, 60 clients, because I want to follow up and monitor and be proactive with the client. If something happens in the market, that I can call him or do a Zoom or a team or even a physical meeting if that's possible, in order to follow up. And the third one is that I'm the manager of the portfolio and also the commercial, so the relationship manager of that client, which in a lot of banks you only have a private banker or relation or a manager. I'm combining both. That's portfolio management. The fee there is I only have one fee. There are no hidden costs because I work a lot with ETFs. Is 0.08% of the portfolio, and a performance fee. And a performance fee, if I do my job well, then I have a performance fee of 10% if I beat the inflation. Suppose I have a year where my portfolio is down because of the market is going down, then you won't pay that. If a portfolio is doing 10% uh, and I beat inflation, because that's the ultimate goal, then I will have 10% of the difference as a performance fee. But the 0.8 is just a normal traditional fee on the portfolio. And the third one is a family office wealth coach type of service. That's more for quite wealthy families who have a lot of who have not only an investment portfolio but perhaps also a family with children and succession planning, and they have real estate, they have stakes in companies, and they have um, more and more wealth altogether and from a holistic point of view, but they need someone that they can trust in order to manage their wealth, to grow, to protect, and to transfer to the next generation. I'm the specialist in investment management, but I will work together with specialists, with lawyers, with fiscal lawyers, if I have questions on succession planning for the children, education for next gen. For instance, an entrepreneur who is 40 or 50 years old and has someone who is 20, 25 and wants to step in the company of their parents. I educate them as well on investing and on building wealth, because a lot of people, you don't always have that at university or even at school. So a lot of these people who will have a lot of money because they follow in the footstep of their parents in the company, to educate them as well. So it's more of a holistic service. I don't manage the money, but I will be a sort of a financial butler or a coordinator for wealthy families.
That's very clear. Thank you very much. The three offers are very clear. I will ask you the slide like this. I can display it at the end of the video. Of course, this video will be cut in piece and will be published on my on the YouTube channel of Finance Hacking, which is a YouTube channel only available for the member of the community Finance Hacking. For the moment, it's free, but let's see what happens in the future. My topic is to educate, and today you have one of the best experts in ETF coming from BlackRock, and who have launched his business 1 year ago, and who will be very interested in helping you to improve your ETF wealth management. Thank you
Thank
very
you very
much,
much.
Stefan. It
Thank
was
you.
very good to meet you, and I hope we will have the opportunity to do all those videos together.
Okay, I'm looking forward to that. Thank you very much, all. Have a nice day.